Manishi, how do you view this, both structurally as well as from an India standpoint, optically as well as from an India investor standpoint? How are you seeing it?
I think, it's undoubtedly good news, especially coming on the heels of the India-EU FTA that was signed a little more than a week ago. It does two things. Number one, it assuages a lot of concerns about, I think, the rupee. We are seeing that in the rupee appreciating, I think around somewhere between 1 to 1.5%. We had seen of late, particularly in the October data, that the monthly trade deficit had expanded to about 42 billion. So there is a significant possibility that the trade deficit would decline. It would moderate again, which should, sort of assuage concerns on the balance of payment situation and therefore stabilize the rupee. I would think that this should also lead to some kind of a revival in the FII flows, because there had been the FII selling that we had seen was basically predicated on two things. Number one, this decline in earnings estimates and the decline in margins that we have seen for the Indian corporate universe as a whole over the last couple of years. And of course, the concern on the currency. So I think if these two things get addressed, if there is a degree of employment creation, employment generation in the export intensive sectors, then we would have, clearly we would have a better picture. I think it may be too early to say that the last 15 to 16 months underperformance of India has come to an end, and this is the inflection point. For that, I would still wait for the earnings estimates to revive, but it's definitely a good start.